The Financial Survival Network, helping you survive and thrive in the new economy. Go to CarrieLutz.com and sign up for 30 free micro trainings on financial survival.
1490 WGCH. This is Carrie Lutz, and you're listening to the Financial Survival Network, which is brought to you by Miles Franklin. They've been in business selling gold and silver for over 20 years, and I'm a customer because when you buy, they ship. For more information, find them on the web at milesfranklin.com or give them a call at 800-822-8080 and get a free quote. You know that we're always interested in finding ways to profit, even in down markets, maybe especially in down markets. For so long, people have felt that the market is just rigged. They have no chance at making a return, let alone a handsome return. Dr. Alan Ellman is with me now. He's been doing covered calls, investing in the market forever, and he's been extremely successful at it. He runs a site, thebluecollarinvestor.com. Alan, welcome back to the Financial Survival Network.
Thanks for inviting me, Kerry. Appreciate it.
Yeah, well, we're happy to have you back. These markets have been pretty tough lately, haven't they?
They're challenging, but you can navigate through them. You just have to know what to do.
Been fairly successful this year when you think about what's been going on, the carnage in the streets, huh?
Well, yes, I've been. I'm on the plus column. I have to say that once I found the strategy of covered call writing, I've managed to beat the market every single year. So if you know what you're doing, and it's not that complicated, you can actually navigate through these difficult times and end up with positive results.
You didn't start out doing this. You were a dentist, right? You kind of like started doing this on the side?
Well, yes. What happened was one day I decided I'm going to learn the stock market. My parents invested in the market, but they did it through a broker. And I never really understood it, so I decided I was going to learn it. So I went to the bookstore, and every week I would read another book on the market, and I would watch as much TV and radio and the financial papers and magazines. And I always had a pen in hand and paper in front of me, figuring out, I want to develop a system that's better than anything else. And I was always pretty good at buying and selling stock, but then when I came across covered call writing, and I found out about it when I was reading an article, by the way, on self-directed IRAs. That's how I said, gee, the government allows you to do options in a self-directed IRA. So I started reading about it, and unfortunately, my books weren't available then. But I took out whatever I could find, and I started learning and using the system. And right away, right from the get-go, I started doing better than I had been doing with just stocks by themselves. And it turned out that wasn't beginner's luck. That's continued through the last 2 decades.
Oh,
So I still have a dental practice, although I've cut back dramatically on it. And I have other interests. I do a lot of real estate investing as well. But my favorite form of investing is covered call writing. It's probably because of all the control that I have over it.
You're making money, so nothing succeeds like success, as they say. That's just a great thing. I think I speak for the average person out there. I speak for you, is you're feeling that this market is totally rigged against you. There's no way that you can make money, and that don't even bother because you just don't have a chance. And you're saying that's not really the case, is it? No,
but there are a lot more components to the market movement than many years ago. I mean, we live in a global economy right now. So these factors have to be considered when we're making our investments. But there are so many ways to mitigate these circumstances, and you have to be prepared. So it's easy to do a strategy when everything's going your way. But the question becomes, what do you do if a trade turns against you? And for most people, it's, almost curling up into a ball and feeling sorry for yourself. But if you know what you're doing, you can execute exit strategies that will mitigate losses and many times turn losses into gains. So it's really being prepared, being educated, and then acting in a non-emotional way. that is the recipe for success.
So you're saying that even when a trade goes against you, you can still, if you execute the strategy properly, you can still make money at it?
Well, no, that's not exactly what I'm saying. Many times you will, but at the very least, what you're going to do is you're going to decrease losses. So if you have 20 trades, I'm not saying that you're going to have 20 successful trades, but if you can have 15 successful trades or even 12 successful trades, you're going to make a lot of money in the market. So by being prepared with exit strategies, what you're going to do is you're going to take some losses and decrease them, but in many cases you're also going to take some losses and turn them into gains. But what you shouldn't do is take a loss and not act at all.
Yeah, just let it ride, so to speak. Story of my life, unfortunately. I hate to admit it. So there's obviously some major advantages to covered call writing.
There are several advantages to covered call writing. I can give you a couple of my favorite ones. I have a list too long for a show like this, but I get a higher rate of return using covered call writing than any other form of stock investing. And at the same time, I'm minimizing my risk. So as a matter of fact, this system is approved by the government to be used in your self-directed IRA accounts.
Really?
Yes, and as you know, Kerry, the government is very fussy as to what strategies it permits in self-directed IRAs.
Sure, no margin allowed, no short selling.
Yeah, but covered call writing is permitted, and whenever possible, I advise my members to try to trade in a sheltered account, and this way Uncle Sam isn't your partner for all the years that you're generating these monthly cash returns.
What a nice thought. What a nice thought that is. So you're basically tax deferred until you're forced by the government to start taking money out of your IRA.
And if it's Roth, you never have to pay taxes on it. So there are certainly advantages to using sheltered accounts. Another advantage, Kerry, with covered call writing is that when you generate your profit from the sale of the option, and I don't know if you're going to want me to review what covered call writing is, but you're actually buying a stock and then selling the option. That cash from the sale of the option is generated into your brokerage account instantaneously. So, for example, if you have, and I'm going to give a large number now, if you have a $300,000 account and you sell 1 month options on the stocks that you've purchased, you could generate $10,000 in profit and then take that $10,000 2 minutes later and buy $10,000 worth of stock and then sell the options on those new shares. So you're, in essence, compounding your money in minutes.
I thought only banks could do that, fractional reserve lending. That's what it almost sounds like, you know.
Well, what you're doing is you're selling an option, and selling implies that you're going to be getting cash in return for undertaking the obligation, which you are. And now with the internet and computer age and everything, that cash is in your account in seconds. It's just amazing. And for most brokerages, you could use that cash either right then and there or the next day. So you're in a position to take that profit and put it to work immediately. Wow. So that's another big advantage of covered call writing. I don't really know of any other strategies where you could compound your money that quickly.
So you're effectively getting a compound interest return almost.
Instantly, yes.
Yeah.
And that's something that you need to take advantage of. When I first started doing this, I used to let the money kind of sit in my account until the next month when I would start the process all over again. And one day I said to myself, hey, wait a second, I have all this cash in my account that's sitting around doing nothing. I got to put it to work. And ever since then, that's what I've been doing. So that's another major advantage of covered call writing. And I'll give you one more, and probably my favorite is that you can control your profits and results through a series of exit strategies, which we talked about before. And this is so important that I've actually written an entire book on this one subject of exit strategies specifically for covered call writing. And that will take your level of profits from pretty good to, oh my God, if you really know how to manage your positions. And that includes not only a trade turning against you, but what if the stock just goes to the moon after you buy it? And it goes way higher, and you have this obligation to sell it at a certain price. Well, there's even a way of making additional profits when that happens as well. And so, as I said before, if you're prepared, you could mitigate losses, and you could turn losses into gains, and in some case, you can actually make gains even greater than the great percentage return you get initially.
That's remarkable. So as far as disadvantages go to covered call writing, what are the main ones, the top three?
Okay. Well, if, let's say, you bought and I gave this hypothetical the last time I was on your show, Kerry. If you buy a stock at 48 and sell the $50 call option, that means you're agreeing to sell the stock for $50 after you purchased it for 48. Well, you're going to get a cash return on that option premium, and a typical return would be, let's say, $1.50 per share. So if you had 100 shares, which is the equivalent of one options contract, you would get $150 cash into your account. Now, if you look at the situation, the break-even is $46.50. You bought a stock for 48, and you generated $1.50 from the sale of the option. So your break-even is $46.50. So one disadvantage is that if the price of the stock declines below your break-even, you start losing money. You're in the stock market. So even though you have the extra leg of selling an option, there is a point where you will start losing money, but that's where your exit strategies kick in at that point. The biggest disadvantage of selling covered call options is this. If the price of the stock accelerates exponentially, you're not going to get the additional profit. And I'll give you an example that'll make that come to life. Let's go back to what I said before. We buy a stock for 48, we sell the $50 call for $1.50. Let's say some great news comes out about the company, FDA approval of a new drug, something of that nature. And all of a sudden, the price of the stock goes from 48 to 60. I mean, that doesn't happen often, but it happens from time to time. Now, we've agreed to sell it for 50. The sale of the option obligates us to sell it for 50. So we can't get those 10 extra points from 50 to 60. Now, I said before that there is an exit strategy that I developed where you actually can make more money. But that's not for this interview. That's for another time. But in essence, what you're doing is you're capping the upside on share appreciation. So that is a disadvantage of covered call writing. A third one, you asked for my top three. The third one would be that there is a learning curve and a time commitment. I think that probably applies to all forms of investing. You do a lot of work with gold, so I'm sure you will tell your clients that they really need to know what they're doing and they need to do their research and due diligence. Well, the same thing with covered call writing. You need to learn. And when I tell my members learn, I say I'm talking about mastering the system, not becoming pretty good at it, mastering it, knowing every aspect of it. It won't take that long, and you don't have to be a rocket scientist to learn this. But after 3 or 4 months, you can master this system, and then you have years and decades to benefit from it. So if you're willing to go through that learning curve and spend a few hours a month managing your positions, this could be a great strategy that will have a positive impact on you and your family for years and years.
That's amazing. I've been in the market. I've probably lost more than I've made over the time, but I've done really well over the past 5 years in a lot of different off-the-wall kind of junior miners and other type resource-based stocks. But to be able to do it consistently, I don't think I could ever make that claim. Kind of just always felt at the mercy of the forces of the market beyond my control. But having the exit strategy, I think you also mentioned the rolling down exit strategy, really sounds like you cover the bases. A lot of my people who listen to me, if you're listening, you know that I'm in favor of keeping a core percentage of metals holdings just as an insurance policy. But unless you can figure out a way to opt out of the system altogether and put your money in a place where it's going to be safe. We all have to be part of this system, which means we need to be actively involved in managing our non-metal investments. It seems to me that this strategy gives you the ability to do that and to profit even in down markets.
Well, that's one of the things that attracted me to this strategy was the amount of control that you actually have. You actually feel like, you're not at anybody's mercy. Now, of course, market forces can be quite strong. I mean, we have issues going on now in Europe. We have a Congress that's in gridlock. We have a lot of issues that's impacting the market. But yet, if you take a look and compare the stock market to the bond market, to the real estate market, I'm also very big into real estate investing. I think you'd have to say that if you're going to make money anywhere these days, it's going to be in the stock market. If you're not at anybody's mercy and you know how to navigate your way through it, it really gives you a feeling of empowerment that, you know what, even though I'm an average retail investor, I can make money and I can control how much money I make and I can mitigate losses just by being prepared and acting, and again, I'm going to underline this, in a non-emotional way.
Yeah, it always comes down to that because your emotions will do you in so quickly if you're not prepared for the possibilities of what can happen there, right?
Emotions are going to make you buy high and sell low.
They always have for me, I'll tell you that.
That's
always.
What I see it all the time. They're going to buy high and sell low. So, yes, if you feel like, you know what, I understand how this works, I'm prepared, for every possible scenario, and I'm going to act in a non-emotional way, then over the long run, you're going to do better than somebody else who's just either waiting for somebody to tell them what to do or just acting on pure emotion.
Yeah, and that's what the professionals do. They know what they're going to do wherever the market goes, and they've prepared for their exit strategy ahead of time.
Yes, they're prepared. Now, they don't always get it right. I mean, the professional, the institutional investors, I mean, they have huge chunks of stocks that they have to either buy or sell. It's much more difficult for them than it is for somebody like you and me and your listeners because, we're selling a few hundred shares. That's easy. They may be selling a few 100,000 shares. So that actually created things called dark pools and other venues for the institutional investors. But there are certain advantages that average retail investors have over the institutional investors, and when that comes along, we have to take advantage of it.
Well, it's been great having you on again, Alan, and every time I talk to you, I learn more, and people wanting to learn more about you and about writing covered calls. So, again, to find out more about you, Alan, and what you're teaching, covered call writing, where would we find you?
My website is thebluecollarinvestor.com. And I answer all my emails at Alan, A-L-A-N, at thebluecollarinvestor.com.
All right. Well, Alan, hey, thanks so much once again. And we're looking forward to seeing how the system works out. I'm going to be following it much closer myself because I think in these really volatile markets, to have a discipline where you're going to make money. And hey, we don't know if the stock market's going up or down, QE 2, 3, 4, or 5. We don't know. But what we do know is that there's going to be volatility, and we want to position ourselves. You need to be positioned in the best possible way that you can profit regardless what the market's doing, right?
Well said, Kerry.
All right. Hey, Alan, we'll talk to you again soon. Be well. And again, the bluecollarinvestor.com, great site, a lot of good things on there that you don't even have to pay for.
Thanks very much, Kerry. Appreciate the invitation.
Hey, take care.
Take care.